Joining us now is Senior Vice President of Morgan Stanley, Tim Meigher, with a look at the stock market for the month of November. Well, how'd we do?
Welcome back.
Thank you.
Great to see you again. We did a lot better in the sense that it was a lot quieter in November than it had been in October. If you recall, in October we had a wild ride right into the middle of the month, down sharply, recovered sharply, and at the end of the month it carried into November. I'd say both indices, the S&P 500 and the Dow, are up a little over 2% each. And that takes it to the year where I think the S&P, including dividends, is up about 13 to 14%. The Dow up around 10 to 11%. So right now it's as if everything's fine, everything's heading in the right direction, and you know, we look toward the end of the year to see how it finishes with, what, 5 or 6 weeks to go.
Okay, so people who are investing now or considering investing and their confidence, I mean, what are the things that they should look at? You talked about fear of missing out and FOMO.
Fear of missing out, FOMO, is one of the acronyms I hear a lot. And that's just people, and you saw it in October actually, when the market went down so fast, so dramatically, people said, hey, I've been waiting for this opportunity, I'm going to put some cash in, whether it's in my 401k or I'm a professional portfolio manager, waiting for the opportunity and jumping on it. And that's the fear of missing out. I don't care if it goes lower, I can now get it cheaper than I could 2 or 3 weeks ago, and I'm going to do it. So that's one. And then the alternative, TINA, Tina, there is no alternative in the sense that bonds don't really offer a competitive advantage like they normally would. So people are cheating their way out of bonds, coming into stocks. They'll go back to bonds when interest rates get back to a more normal level. But right now, it seems to be like there is no alternative until things change in the bond market.
So the people who jumped on those opportunities because they had a fear of missing out, are they happy about that now, or are they not so happy?
Well, I think everybody who jumps on it is jumping on it with cash. I don't see too many people that are all out and then come all back in all at once. If they did that, they would be happy if they hit it around the 15th or 16th of October. But I think people that are in it for the long run just say, hey, I've got too much cash here, I want to get fully invested, cash is paying me nothing, and I'm going to go for it.
So as we head to the finish line then, are we optimistic?
I'm pretty optimistic. I think momentum is in our favor, and I think if you go pump gas now at roughly $3 a gallon versus when you were pumping it at $4, that $1 a gallon stays in your pocket. We're heading into the retail season. It's a big deal. If we do well this season, it ripples through the economy and it ripples through earnings. And that's what the stock market's really about, good earnings. And so that's a tax cut in a way. And if it gets into them all, that's a good thing for stock investors.
So let's finish strong.
I hope so.
All right.